The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we will be reviewing first green day trading examples from the last few months, exactly as they present right out of the playbook. First green day, page 64. We will also be reviewing the inside day along with first green day presentations, 3 session setups, 3-day setup variations of the first green day trade setups, and of course our basic model for trade entry criteria. Page 29 in the playbook. The importance of being willing to sit on your hands and understanding the mechanisms behind best trade setups. The quote, although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it absolutely sure it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope. Preferably one that is sick or lame. Only then, when there is no chance it can lose its prey, does it attack. That, to me, is the epitome of professional trading. Mark Weinstein, one of the market wizards. Now, first green day trade setups are low of day, low of session, low of week in some cases, buying opportunities, if indeed they present. So number one, what's the importance of a first green day trade setup? Well, it's a basket of instruments. If you have a basket of instruments, no matter what session you're trading, whether it be Asia, London, or New York, as I've mentioned, if you trade Asia, have a basket of instruments that reflect the Asian session. Yen crosses, Aussie dollar crosses, New Zealand dollar crosses. Instruments that potentially may show more movement in those sessions, especially when we have a signal day. It's not about the instrument, it's about the 90-10 opportunity of the setup itself. It's the setups, not the instruments. So any instrument that potentially can move in your session, if you're trading London, pound crosses, euro crosses. And of course, any instrument can move at any time during the week if you find that opportunity. But most cases, these instruments will reflect those opportunities. And of course, over the course of the U.S. session, a 3-session setup, especially on Free Cash Friday, can offer traders parabolic opportunities, either trend trades or reversal trades, depending on what that template shows. Number 2, they were driven by other time frame traders. First green day trade setups. When we get an opportunity to participate in one of these moves, in a high majority of cases, these will be driven by other time frame traders. And what that means is there are larger players in the market driving that trade opportunity. So, number 3, typically, they can be held until or near the close of the day. And that is because other time frame traders are driving this move. There is a larger, bigger players participating in that move, and they are moving the market. Number 4, and as I mentioned in the first red day trade setups, these are scalable in size. Scalable in size means they rinse and repeat, and I can increase size as my account grows and hit the same trade setups with larger size. And to clarify that, what that means is don't confuse movement and volatility with scalability. There's a big difference. Movement and volatility are not scalable. So I caught 50 pips. But that's different than having a scalable first green day trade setup that is driven by other time frame traders that can be scaled up in size, whether it's 50, 75, or 250. Volatility and movement are not scalable. Trade setups are scalable. Number 5, they can show up on any instrument. As we mentioned, it's setups, not instrument. And number 6, they repeat over and over and over again. First green day trade setups. Also, the PDF for this presentation will be downloaded into the course in the first green day, first red day section under first green day trade setup examples 2024. So this PDF is now in your course selection area. Just reviewing the important understanding of when you have an opportunity, or when I have an opportunity and when I look for a setup, there are two types of templates on the day itself. Number one, it will either be a pump and dump, which we will see typically with a first red day or a shorting opportunity, or in the case of first green day opportunities, a dump and pump template. So every type of setup, whether it's a 3-session, a 3-day, a 3-hour setup, will culminate in either a dump and pump or a pump and dump template. The fact that we're going through first green day examples, we are going to be looking at dump and pump templates for these trade setup opportunities. Also reviewing the importance of understanding a weekly template. Monday, day 1 is the opening range. Tuesday, day 2, our initial balance typically expands the range. Now we've talked about 3-day setups, and 3-day setups can occur when we get signal days or opportunities, high of low of week, Thursday, Friday, Monday, Friday, Monday, Tuesday. On the front side of a week, the economic calendar can impact how the front side of a week or the back side of the week will play out. Wednesday, day 3, typically becomes the midpoint range of our week. Front side, back side. Monday, Tuesday, Wednesday, you're closer to the midpoint. That's the front side of the week. Wednesday, Thursday, Friday, you're closer to the closing range of the week. Wednesday's day 1, the midpoint range of the week. Thursday, day 2, on the back side. And Friday, day 3, is our closing range of the week. Now, we've talked about pump and dump, dump and pump. We can have trading ranges and trending templates. The question that I'm always asking myself is, what type of weekly template am I in? One of the most important concepts I reinforce over and over again is, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Bill Lipschutz, the Sultan of Currency, going back to the understanding that movement and volatility are not scalable. So differentiating between catching a move or grabbing some pips and an opportunity that can be scaled into and held because it has other time frame traders driving that move. One of the most important concepts I reinforce over and over again is, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Bill Lipschutz, the Sultan of Currency, going back to the understanding that movement and volatility are not scalable. So differentiating between catching a move or grabbing some pips and an opportunity that can be scaled into and held because it has other time frame traders driving that move. 3 levels that I work from each and every day, and when I have a trade setup: high of day, low of day, closing price. When a week starts, Friday's closing price is where the auction process begins from. Above the high of day, we have other time frame traders. Above the high of a week, we have other time frame traders. Larger players that come into the market to either potentially join onto a move for a range expansion or to potentially be driving it the other way. Same thing with the low of day, low of week level. Other time frame traders, larger players, institutions, funds. Larger money that comes into the market will typically involve these levels. The closing price level is a magnet and can also be a level where a trade will take place from, especially for a parabolic opportunity. The 3 levels that every single trader has when they come to the screen each day. So we're going to be going through some examples that have happened in the last few months. First example is a Japanese yen back in February, and the different types of examples we'll be going through today show how different types of first green day opportunities can present. So understanding that it's not just the same thing over and over again. There's opportunities everywhere, especially if you have a basket of instruments and you become very proficient at being able to identify when a first green day template shows up. We had non-farm payrolls on the Friday at the beginning of the month that was a large pump day. That market continued to make higher highs. Monday opening range. Tuesday closes as a first red day, but at the end of our Wednesday, our midpoint range of the week, we have a first green day template heading into our Thursday, day 2 on the backside of the week. And this is a great example of an opportunity in the Asian window from closing price into the Asian session. First green day on an Asian cross pair. Now, sometimes these opportunities can present in London. They may present in the US window. If I was trading the Asian session, this is a pair that I would be looking at. If I was trading the New York session, I would look at this pair to see if that opportunity has played out yet. And the same would apply for London. So traders had the opportunity to enter into this market at a couple of opportunities, a starter and then an additional position as the Asian session began to trade. Also recognizing, as we've gone over in first red day video review as well, that this market closed at or near the extreme. Now, whether traders hold that or take positions off, partials off, is up to their prerogative. Now, towards the end of the day, this gave traders an excellent risk-reward return on a first green day template. An example of the British pound, and understanding again Wednesday, Thursday, Friday, the midpoint range of the week and the closing range of the week. Heading into a new week, we have a first green day signal on the Friday from the low of week level. So we've taken out the low of week and reversed and formed a first green day. Now, in the playbook, I talk about first green day, first red day opportunities the day after the trade, and then following that through, because often traders will get a session trade and they'll walk away and forget about the instrument, but the second day after and following, opportunities can continue to show up on these instruments. On the Monday, we had a U.S. session continuation trade in a market that had already broken higher in the London window, consolidated underneath the high of the previous week before breaking higher in a beautiful parabolic trade long on the Monday, the opening range of the week. Again, noticing this market did not close at the extreme, but it gave traders still zero heat pulling back into the trade, even if they held it into the close or did not take the majority of their profits off once this market went parabolic. And this is also an example on a longer time frame, the 30-minute again, as the market began to continue to trade throughout the week. This market continued to break higher, pull back, and continue the trend. Now, depending on which session traders were trading, they may or may not have had an opportunity to continue to re-enter into a market for a parabolic range expansion opportunity. This market continued to not only go day 1, day 2, day 3 reset, but continue to trend on the backside of the week. This was the beginning of a new month, and this consolidation heading into the new month forms a geometrical rectangle that could be used to target a range expansion profit target in the long direction. Again, coming back to classical charting principles. The NASDAQ 100, we had a market that was in breakout heading into the close of the week on the Friday. The Monday traded as an inside day and also closed as a first green day. First green day on a Monday in a new week, an inside day and a first green day. So we have a combination of signal days, the inside day, page 69 in the playbook, as well as the first green day on a Monday, our opening range of the new week, page 64. I only trade U.S. indexes in the New York session. This market consolidates at closing price level before pumping higher and dumping and pulling back and coiling into our New York open for a range expansion parabolic trade in the long direction after our first green day and our inside day signal day. This was April 23rd. An example on gold from back in February, we had a large dumping day on a Tuesday, a large dumping day after the release of CPI. That dump went into consolidation on our Wednesday before breaking higher and closing as a first green day on Thursday. On the backside of the week, day 1, day 2, day 3 reset, and then a first green day on our Thursday on the backside of the week. We had major red news on this day at 8:30 and 10 a.m. on our Friday. The market did not break any daily levels. It dropped on major news at 8:30, traded lower, and at 10 a.m. the market reversed and engulfed. Where we're free now, there's no more major red news on the schedule. It is a short squeeze reversal, early opportunity to enter down low. It pulls back inside of our basic model trade entry criteria and goes parabolic back through the high of the day and continues to trade into the close of the day near the high of the day on Free Cash Friday. A parabolic trend trade on the Friday to close out the week. That continued into the next day, as we can see on our Monday, but the parabolic reversal after the first green day and the large dumping CPI day on Tuesday on the front side of the week. And a great example on gold. As I went over also with the first red day examples, this instrument is irrelevant. It's the setups, and traders ask all the time whether or not this can work on crypto or any other instrument. And as I mentioned, it's always important to back test, but if it has traders and money involved, then it will most likely show up. And this is a Bitcoin example. And in April, we have a Monday, Tuesday, Wednesday breaking lower before coiling back as an inside day and closing as a first green day on our Thursday. Wednesday is the midpoint range of the week. Thursday closes as a first green day. And when we head into our Friday session, Asian session traders obviously had a parabolic short trade down into the low of week level before that market reversed and began to coil higher and dumping down into the open of the London session and going parabolic back through the high of the day and the high of Wednesday, the midpoint range of the week. And again, pointing out to traders, this market closed near or at the extreme into the end of the session. So traders who were positioned long into this in the London window were able to hold on to that if they chose, or take the majority of their position off after our first green day signal that took out the low of the week, the low of the week, the low of the day, before pulling back and coiling higher highs, higher lows for the dump and pump template on a larger time frame, but also on the day itself, a dump and pump template, first green day opportunity on Bitcoin. An example on a cross rate pair, the pound Canadian. This is from today, Monday, May 6th. We have a market that, again, our midpoint range of the week was an inside day, a dumping day that gave traders a trend trade continuation on Thursday that broke out of Wednesday's low of day level. Friday was an inside day that closed as a first green day heading into our new week. And you'll notice the larger dump and potential pump template that is building. Again, timings, levels, behavior of price. How does price behave when we get there? We head into our London session. Again, an example of a London cross rate pair, a pound cross rate pair, heading into our London session after a first green day signal, starting the new week for a parabolic explosive coil right off of closing price through the high of day and into our highest closing price from the previous week. Timings, levels, behavior of price. This is an example where this market has broke down and pulled back and into our US window, gave a reversal shorting opportunity back into traders that were long. So understanding this is Monday, the opening range of the week. We're not on the backside where a market may potentially be going for a day one, day two trend continuation trade. We're starting a new week. Monday is the opening range and day one in a new weekly template. We're looking at West Texas oil. Monday took out the low of the week level before reversing and working higher on the Tuesday for an explosive breakout that closed as a first green day. That market continued to push higher before breaking down on Wednesday, our midpoint range of the week. But this market is in breakout. We first red day signal on our Wednesday. Now, this is an important example for traders to recognize where they're looking for a first red day trade. Now, we have an example of where traders would be shorting this in the New York session at the high of the day at the open of the oil New York session window. But we have a market that is in breakout, day one, day two, and we have Friday's closing price as a reference point that begins the auction process. That's where everything starts from when the new week starts. We have a first red day close on our Wednesday, but we have a market that has broken out. Breakout, pullback, potential continuation. Traders shorted this on the inside at the beginning of the New York 9 a.m. window. So we're already inside of a first hour high. They've made higher highs. Traders that shorted this down into the low of day level potentially may have gotten a scalp or got stopped out. but this market coiled underneath in a market that has broken out and is now pulling back. It made higher highs on Wednesday, coiling sideways on our day 2 for a parabolic continuation trade from our initial breakout on Tuesday. This is a unique example, but demonstrating that this market started to sell down from the inside. It broke a low of day level. Other time frame traders, so traders that were shorting into the low, could recognize to either be taking profits but not holding on. This market is now reversing and giving traders an opportunity for a parabolic explosive move back through the high of the week. This is a unique example, but it does show up on indexes, oil, and occasionally currencies. Importance of understanding when a market breaks out, if you're getting trades on the inside, how to manage and protect those. Example from last week on the Aussie dollar. On Monday morning, we break out, make higher highs before reversing on Tuesday, day 2. So we've made a high of week level on our Monday, our opening range. They've expanded the range, triggered longs into the market before breaking down and breaking out on Tuesday, day 2, and reversing after the Fed on Wednesday, FOMC, and closing as a first green day. Again, recognize the larger template. Higher highs and then dumping down. Broken out, reversing, and giving us a first green day signal. Market breaks out and makes higher highs. Again, higher highs on the inside is the dump and pump template. Dumping down into closing price, into our New York session window. Early opportunity on smaller time frame for entering at closing price. Our basic model for trade entry criteria allows traders a couple of opportunities to enter but also add additional positions, and the parabolic continuation trade back through the high of the week and closing at or near the extreme of the day. Dump and pump parabolic first green day. We're looking at the Euro Oz. Wednesday breaks out on the previous week, a breakout that reverses and gives an inside day. We have an inside day. On Friday, the market breaks out of the inside day before reversing. Again, the inside day is either typically going to be a reversal, a false break reversal opportunity, or a trend trade continuation. We have a first green day heading into our new week, Monday, the opening range, day 1 of the new week. Recognizing the dump and potential pump if that market gives us that opportunity. It's either a pump and a dump or a dump and a pump over the larger time frame. We head into our Monday opening range, day 1 for the new week. The market breaks down before coiling sideways, and late in the U.S. session begins to trade back above closing price. So even recognizing on the day itself a dump and pump in a narrow range day underneath closing price before breaking higher out of the high of day level and coiling sideways. We've talked about different examples of this. When a market coils sideways underneath the high of day or on top of the low of day, it potentially can be building for a parabolic opportunity. We're heading into our Asian session on day 2. Day 2 typically expands the range. We have a first green day opportunity. The market has broken out and coiled sideways heading into our new day 2. We have an early entry opportunity, coiled sideways on top of closing price underneath high of day, but underneath the high of week, and this market explodes and gives an easy 50 pip parabolic opportunity. So understanding this trade is not a 5-minute chart setup. This is being driven by other time frame traders. And this is the important concept to grasp when we have a larger 3-day dump and pump or pump and dump template opportunity. Following this through the next day, this is an example of where the market has broken out and has gone on a range expansion and continued into the next session in London to go higher. Now, this market did pull back and coil sideways into the close, but we have still broken out of the high of day, and this market has given traders an excellent reward to risk opportunity after a first green day template that coiled sideways into the day 2, and day 2 typically expands the range. An important understanding that a market that is being driven by other time frame traders can continue to move in the direction of that trade. The simple understanding of the power of other time frame traders driving these opportunities. These setups can show up on any instrument and any session if you have a basket that can reflect those opportunities. They are scalable in size, and the majority of these can be held until or near the close of the day. Now, how traders manage that is up to their discretion. I typically will take off the majority of positions on a range expansion, but some of these can be held on or into the new day. And reminding traders, don't confuse movement and volatility with scalability. These are specific trade setup opportunities. They can be scaled up in size, and they repeat over and over again. Again, repeating that this PDF is now in the back office in your course under First Green Day Trade Examples 2024. Keep it simple, traders. Focus on the big picture and the opportunities that are scalable in size. Have a great day, and may the markets go with you.